That is Glenn Fry there. It is 8:37 here, 23 now before 9. Time to check in on your money. Find out how your 401k and IRA are doing now that we're open again and throwing money around on Wall Street after a few days off. Head downtown. Let's find out what the offices of Statler Financial Service feel like today. Phillip Statler's on the line. Phillip, good morning. How are you?
Good morning, Dave. Hey, doing well today. Glad it's warming up a little bit, just in time to get cold, I guess, again towards the end of the week.
Yeah, I didn't know whether to blame it on Martin Luther King Jr. Day yesterday or whether you're just good sense that you weren't here with me yesterday, but nobody should have been out any earlier than they had to be yesterday morning.
Yeah, it was a little chilly. So, but hey, let's just really appreciate that we're in Florida and not in the Northeast where it's like 0.
Oh, good Lord, yes. Dave, they had wind chills at 20 below up in New York City. Not that I'd want to move there anyway, but boy, there's a reason to stay away from there too, isn't it?
Yeah, it is. Hey, yesterday was just a kind of a no market news for us yesterday because of Martin Luther King Day. And so we're you talked about yesterday, Friday. It's such a good day on Friday. It's not leaning that way right now, though, Dave.
No, it doesn't look like it. And a good point of that from the analysts I've been able to read anyway, it's a whole bunch of data dump that China gave us over the weekend, including their home sales are leveling off. And with the population exploding as fast as China's generally does, that's bad news. And their overall growth rate, one of the reports yesterday that I was pulling up, said that China's experienced its slowest annual growth rate since 1990. And that's scary for the whole world, especially for a country that does as much trading with China as we do.
Well, you're right, Dave. It is. And to think that that's coming out of China, because if folks remember, China really controls what we hear. We don't know exactly how they arrive at some of their data sometimes. But, because they can play with currency. There's a lot of things that they can do to manipulate their economy. So for them to be saying that we're slowing down, that to me is some big news, Dave.
I agree. And a command and control economy like China, I kind of figure if they say we're only growing at 6.7%, which is bad news for China, they're probably really only growing at 2%, or they might actually be in a recession, because what we get, you put it well, what we get out of the government is what the government wants us to hear. It's the only place on the face of the earth when they can fix a bull market, where they can fix a bear market with a government order that says buy something, right?
Exactly. So, it is what it is. That's what we've always had to deal with. But it is interesting that they are showing that they are slowing down. And you're right. That's, you can probably cut their number at least in half, if not less, like you said, to what it really is. So that's that, and we take it with what we have to take it with. But I found it interesting. I was reading some this morning that Ray Dalio, and people may not be recognized of that name, but he manages the largest hedge fund. He's a very respected money manager. He's starting to call for he sees a recession in 2020. And I find that interesting because looking at somebody else that was at that money economic conference in overseas this weekend, said that he doesn't see anything. He doesn't see any recession coming. He sees slower economic growth, but no recession coming. So two top money guys not really agreeing.
And it needs to be said, too, these are top money guys. This isn't Jim Cramer flailing his hands in the arm looking for attention on CNBC. These are a couple of guys that actually do throw real money around, and even they can't agree on what's likely to be happening, which kind of leaves poor schmoes like us saying, well, we'll give you the facts and let you make your own decisions, right?
Well, that's right. We've talked before. Nobody has a crystal ball. These guys, the only thing that they have that some of us don't have is longer watching. They've seen more things happen over time. And so that's what they're basing a lot of their decisions on, and a lot of what their opinions are. So that being said, the other thing that's kind of concerning, Dave, is that because of the economic shutdown right now in Washington, there's a lot of numbers we're not getting. Last week we didn't get new home permits. We didn't get new home sales. This week, today, I think we're supposed to get existing home sales. I don't think we're going to get that today. So with the government shutdown, there's a lot of economic numbers we're just not getting.
We're just not seeing the data we need to be able to form an opinion. So it leaves us even more in the dark than we normally would be compared to the guys with the big money, with the big money and all the research and the contacts that these other guys have.
Well, that's true. So, those are some things I think we need to be cognizant of, and remember that nobody does have a crystal ball. And if our economy is slowing down, people need to be ready for that. And I talk about a lot about making sure you've got an exit strategy, make sure you're not taking on too much risk. And I think that still holds true today.
It sounds like it's holding even more true today than it did 6-8 months ago, Philip.
You're probably right, Dave. You're probably right. Hey, I got a couple of earnings I want to mention. Johnson & Johnson came out. They beat by about 2 cents a share. Their revenue top forecast, they're getting some help from some of their cancer research and drugs and their psoriasis treatment. So some good things there. However, their stock is not trading up this morning. They're down about 1.5%. And some of that's due to a report that came out that said that Johnson & Johnson has always known about this talcum powder issue and women's cancer. So that is putting some pressure on their stock this morning, Dave.
I was wondering how that would affect them, because that turned into what boils down to a real major scandal. I mean, the idea that they knew all along there was asbestos in the talcum powder, and they weren't telling anybody about it and saying, no, it's safe, you could use it. And now all of a sudden they know darn good and well they had a carcinogen in it. That's got to be the kind of thing that scares the pants off a company legal department.
You're right. And let's face it, that means it's going to scare the investors, because that's just more of a liability out there that could eventually have to be paid out more than what they've already had to pay out. So the other one I had is Stanley Black & Decker. They came in about a penny above estimates. Their revenue also beat the forecast. However, they're probably on one of your big losers list today, because they are basically downgrading themselves for what they think is going to happen this next year. They think earnings are going to be somewhere around $8.45 to $8.65 a share, when all the analysts out there believe that we should come in about $8.80 a share. So it looks to me like we've got some headwinds coming when it comes to Black & Decker. And so their stock is trading down today a little over 8%.
Yeah, it's pretty close to the top of my loser list at the moment. That's interesting as well. They're giving guidance, because remember, Black & Decker and Stanley make the tools that go into, on top of the hobbyist stuff, they also go into the stuff where they make money off of home building. So it's one of those allied fields that get into a sector that we've been worried about for some time.
Yeah, it is. It is. And the other one I have UBS Group. Now, the problem with them is we don't get the actual numbers, because they're not traded on our exchange. But they are trading down over in the Swiss exchange by about almost 4% this morning.
That's one of the big financials worldwide that we kind of have to watch, and we need to see what they look like over time. Kind of confirms the mixed report we got out of the financial sector earlier, doesn't it?
It does. I kind of did a scan this morning, Dave, of some of the regional and local banks and institutions, and across the board, most of them beat on earnings. There are things that we don't get the details about, but I've got a spreadsheet that kind of shows me here's what everybody's done. And for the most part, most of those regional guys, banking institutions, are beating the estimates.
Now, that's interesting. It was the big national names that had the partial misses, and the regional, I always call them the super regional consumer banks. They tend toward being heavier on the consumer side, because the heavy commercial bread tends to go to the big names. But that's interesting. The big names are getting hit by a little bit, and the regionals are doing okay, huh?
They seem to be. They definitely seem to be on the local area there. Hey, another big headline today, Dave.
Yeah.
eBay. I mean, I can't remember the last time I talked about eBay or even thought about eBay as a company.
They're kind of a dinosaur of the internet revenue field. They've been around for so doggone long now, everything being relative.
They are, but one of the big hedge funds has taken a pretty good sized stake in eBay. $1.4 billion they have purchased of eBay stock. And here's what they want to see. They want to see some division between their companies. And I guess I didn't really realize this, but eBay is the owner of StubHub, the ticket sales company. And so this Elliott Management Group, they want to see it divided up in between the auction group and the classified group and this ticket sales company. So going to be interesting to see how that moves forward.
That gives you an idea of how mature the internet companies are getting. We're now at the point where they're breaking up to, worth more in component parts than it is as a whole. Sounds like what we were talking about with the smokestack industries about 30 years ago, doesn't it?
Yeah, it does. It really does. So it's going to be interesting to see how that one plays out.
Goes around, comes around, don't it? So
does.
Put it into a ball. eBay, by the way, I notice on my sheet it's showing up almost 13%, so the investors kind of like the concept, don't they?
Yeah, they do. Well, if somebody's willing to put that kind of money in it, they feel like they've probably got a pretty decent plan.
Got a hunch. That's right. 45 minutes before we open this morning, setting the table from Friday. You mentioned off the top, it was a darn good day on Wall Street on Friday. Dow was up 336, NASDAQ up almost 73, Standard & Poor's up by the better part of 35, everybody up by at least 1.25% on Friday. It was a barn burner good day, which kind of surprised me in advance of a 3-day weekend for the markets. People don't like leaving money on the table when it's not in control for that kind of time, but everybody felt good on Friday. We got a hangover on Tuesday, Phillip. Where are we going?
Well, we are definitely going to give some of that back, at least at the open. Who knows how it's going to close out today, but right now, everything's pretty much down 0.6 or more. The Dow's down 150 points. S&P 500 is down 18 points. NASDAQ's down 53.5. Gold and silver are down just a little bit. Well, silver's down 0.5%. And crude oil is retreating a little bit. It's down 1.6%, down to $52.94 a barrel.
I can stay there and get back closer to 50, and I'd be perfectly happy. Overseas markets, by and large, I got red ink wall to wall. The Asian markets are still suffering from those Chinese economic reports, and Europe's following suit. Everybody's in red ink this morning overseas. Phillip, somebody want to turn this information into a more stable retirement. Heaven knows a lot of us could use the advice. How do I find you on the phone?
Devin, give us a call at 382-0037. Follow us online at statlerfinancial.com. Hey, check out our Facebook page at Statler Financial Services. Like our page. We share this radio show pretty much every morning. Give you an opportunity, if you don't get to hear it live, you can catch the rebroadcast of it. So good stuff there. And then every weekend, join us for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. Sunday mornings on your sister station, News Talk 730 a.m.
And back here again tomorrow morning with a snapshot of what's happening on the markets up to the second right here on Light. Fair enough?
Fair enough, man. Talk to you tomorrow.
Thank you, Phillip.